Hello and welcome to another Daily Dose of Insights powered by Container Expert. My name is Christian, and every other day we bring to you the key news stories and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at some of the charts that move the week or the other way around, and look at how the container leasing and trading markets are reacting to current situations in the world. So let me quickly share my screen to give you a little bit more guidance of what I'm talking about. What we see here is a snapshot or the xChange platform, specifically our insights tool, where we give our customers better data and visibility to enable them to make better decisions. And what we see here are the one-way leasing charges. We call them pickup charges for 40-foot high cube units from China main ports, Shanghai Ningbo here, just for example, to Savannah and New York, so trans-Pacific one-way leases. You can imagine this similar to when you pick up a car in one location and you drop it off in another location, and typically you pay a one-way fee or a charge or a penalty or something for picking up the container, the rental car in one location and dropping it in a different one. And it's the same thing here. So this is the charge that carriers and freight forwarders and NVOCCs pay for picking up a container in Shanghai Ningbo and returning it in Savannah and New York after having transported their goods. And what we see is that the prices here have increased significantly since the end of last year. And this is due to two factors, and we talked about this extensively in the past. And one is the situation in the Red Sea, the resulting sort of imbalances in carrier networks, in container availability, in turnaround times, etc., and some resulting scarcity of containers in China main ports, and the sort of coinciding factor of the run-up to Chinese New Year. So we had a crunch on capacity and at the same time an increase in demand, and this just pushed up prices significantly from around about $500 to more than 3 times that value, $1,500 to $1,800 for that one-way move. And since then, what do we see now is, of course, the question. We've previously predicted that after Chinese New Year, which ended beginning of this week, the holidays ended the beginning of this week, what will happen to prices? We previously predicted that prices will sort of start to flatten out, to bottom, to fall again, because the rush of demand subsides, and carriers and logistics companies have had the chance to reconfigure, recalibrate their networks over the Chinese New Year period, so that equipment availability should not be such a big issue anymore. And this is exactly what we see. Some of these leasing rates, and bear in mind these are weekly averages, so these can always move a little bit while the week is still ongoing. But some of these prices are already starting to flatten out and to decrease, and this is exactly what we expected. A similar picture actually happens on the China-Europe trade. So let me just sort of look at this real quick. Say Rotterdam, Hamburg, and Antwerpen. Just take out the ones in China, sorry, in the US, and this is exactly what we see. Shanghai Antwerp here is a little bit of an outlier, but all the other charges we see a very similar trend, a significant run up leading up to Chinese New Year, and then prices start to flatten out, bottom out. Yeah, let's just take Antwerp out. I think that's a bit of an outlier. On China-Europe, and this is very interesting, and let me close with that. We also see, since the beginning of the situation in the Red Sea, we see an increased demand for China-Europe rail containers. These are typically double ICL units, better quality because the rail is very sort of heavy on the equipment because of all the rattling and the vibrations. But we see increased demand there, and also suppliers, so container owners, being more willing to lease out containers for the rail services just because of faster turnaround times and sort of the ability to lease out the units very, very quickly. Again, instead of waiting for the unit to return on the ocean leg. So very interesting, a bit of a reverse of the trend that we saw over since the Russia-Ukraine conflict, the situation in the Red Sea, so almost like an alternative conflict pushed up demand for that. Right, again. So that's it from us for today. A little bit of a market roundup. This went a little bit longer than usual. Apologies for that. Have a fantastic start into the Wednesday or a good end of the day, depending on wherever you are. And talk to you again on Friday. Take care.